Okay, the next segment of our session was really around this new legislation that passed 2 weeks ago, the CARES Act, right? The CARES Act is historical, is the largest government stimulus package ever passed into law, and it essentially allows for many, many dollars to be put into the economy in a lot of different ways over the next 6 months, 12 months, 18 months, right? So it's essentially in response to the COVID-19 situation. And essentially what the government is trying to do is keep people paid regardless of their situation, whether they're an employer, whether they're an employee, whether they've been laid off, whether their business has been impacted by this to a great degree, or whether it's forecasted to be impacted in some degree, right? So there's 4 or 5 sections of it. I'm going to take you through the keeping workers paid and employed section, right? There's 2 major components of this, and I think all of our clients are really in a position to benefit if you own your own business, or if you are self-employed, or if you have a Schedule C, you're sole proprietor. You don't have to be a big company. You can be a company of one and still qualify to benefit from some of these things. Now, before I get into this, I must point out that we're not tax advisors, so we cannot tell you specifically the details about your individual situation. You should definitely consult your tax advisor on this, and also in some of these programs that have been put in this bill, that you should be consulting with your business banker, because some of these programs are designed to be administered through your bank, and each business has a different kind of relationship. Each bank has a different kind of program for their customers. Okay, but in the general sense, there's 2 pieces. Okay, it's a Paycheck Protection Program, and then there's the Economic Injury Disaster Loan Program. Now, the Paycheck Protection Program is new, and the Economic Injury Disaster Loan provision has been around a while, but the CARES Act made a couple of enhancements to it. Let's talk about the Paycheck Protection Program first. With this program, this is for businesses with less than 500 employees, and you're eligible as a business to borrow up to $10 million in very low interest, and in a lot of it, it will be considered forgivable, all right? So if you were to calculate your payroll for 2.5 months, and you figure out what is your total payroll for 2.5 months, and you go and you apply for this pension protection program for an amount equivalent to 2.5 months of your payroll, so long as you actually spend the money on payroll for the next 2.5 months, or I think up to 25% of it can be used for things like your rent or utilities or employee benefits, but the payroll component is going to be forgiven, right? So it's basically a forgivable loan. Now, I have seen people to advise that they could get it for more, and maybe if you have business debt at higher rates, and you could refinance that and all that kind of stuff. So there's a lot of different ways you can use it, but the thing that is very, very valuable for even the solo shop, individual that gets a 1099, could be even a small business. Maybe you're doing something making $10,000 a year. It's a sideline business. You're still eligible to collect 2.5 months of what your gross receipts are, and you can do the loan. Now, you have to do this through your bank. And you have to have a banking relationship. It's a business banking relationship with the bank to get that set up. But if you haven't done it and you're self-employed, you need to be asking questions about it. There's a lot of money. It's a lot of money for people. Okay, now the Economic Injury Disaster Loan is a similar thing. It's more of it's been around a long time, but they've deemed the COVID-19 pandemic to be a disaster. And so in this situation, any company that's been injured by the COVID-19 or social distancing or staying at home, all the things that are going on, which is a lot of companies, are eligible for this Economic Injury Disaster Loan. And from what we understand, guidance is that the first $10,000, if you qualify at all, is going to be forgiven. Like, it's a forgivable loan for $10,000. So you can check out more on that at the Small Business Administration website. Both of these are pretty simple processes to apply for. Now, the banks and the SBA has all been swamped in the last week with more applications they probably ever had in the last 20 years combined. But the EIDL program is supposed to go through the end of the year or until funds run out, and the PPP program is specifically for April through June. And of course, Congress is also talking about making another bill and passing another version and maybe extending some of these benefits even further if necessary. So definitely want to learn about it if you haven't already, because it's a lot of money. They basically want to make people continue to have the same earnings that they've had even though they can't work while we're fighting this pandemic. So those are some very important provisions of the CARE Act for businesses and self-employed. Some other provisions were the part for the American family. So the unemployment benefits, for example, if you're displaced from work and you go to North Carolina and you apply for your unemployment benefits, in addition to what you would normally get from the state of North Carolina, the federal grant is going to add another $600 per week on top of what your North Carolina benefit would be. And they're also extending it out for a lot longer period of time than the normal North Carolina unemployment system would allow. So if you do get laid off, you want to make sure that you get in touch with the North Carolina Employment Security Commission right away and get in the queue there, because that's a lot more support dollars for unemployment than we've seen in years, right? They also did recovery rebates. Essentially, if you filed taxes in the last 2 years, 2018, 2019, if you make less than $75,000 a year, they were putting $1,200 in your account. If you make less than $100,000 a year, they put something less than $1,200. It phase out at $100,000. If you have children, they also are giving like $500, I think what the number was, per child that lives in your household. So this is just literally direct deposits going into people's accounts that they had on file from paying their taxes last couple of years. And I think the ones that they don't have your direct deposit information, they'll be either doing mailings or there'll be a way to let them know what address you want them to send that to. But that's another provision that was from the American Families component. For other businesses, mid-size and small-size businesses, they came up with employee retention credits. This is a way to just help businesses have more money in their pocket. You know, when you keep that staff on and you're continuing to pay them, one of your liabilities as a company is a payroll tax liability. Essentially, between March 13th and December 31st, the Federal Reserve has given everybody 50% credit off of their payroll tax. So some of the costs that your employees don't see that you have in terms of paying their payroll, they're matching FICA, matching FUTA, all the different pieces that go with that. You're getting reprieve for 50% of that money immediately as a business owner between now and the end of the year, just to kind of help, again, have more cash in the till, if you will, as your business. Then also another provision for businesses is that they have allowed temporarily with the CARES Act, they're going to allow you, if you had losses in the past couple of years, so 2018, 2019, if you maybe were in acquisition mode or maybe had some big capital expenses and for the year you end up with a net loss, but they wouldn't let you deduct it because it exceeded the thresholds for deductions, they're going to let you go back and grab those losses and bring them into the current year and use them this year. And if you don't need them this year, they put in a 5-year look back so you could capture these losses up for 5 years. So again, these are just measures to make it so each company can have a little bit more cash flow that they would not normally have access to just deal with the challenges associated with fighting this pandemic in terms of business being down and customers not coming into the stores, that kind of stuff. They also put some retirement plan provisions in place, and there's some planning ideas here, and this is where you really want to talk individually with your advisor about does it make sense for you to consider it. But the act put into place that you can withdraw $100,000 or up to $100,000 from any of your retirement plan, your 401k plan, your IRA plan, any qualified retirement account, and you can do that without any early withdrawal penalty. So remember, if you're age 59 and a half or under, if you take money out of those retirement accounts, they're going to charge you a 10% pre-withdrawal penalty because you're not at retirement age. So this act eliminates that penalty. It does not eliminate the taxes. You still have to pay the taxes, but it takes away the 10% penalty. Now, one thing that they've also done is if you take the money out of your retirement account because you need the cash flow to just keep things going in your household, is they've said, well, we're going to take the tax liability for that withdrawal and we'll allow you to spread it over 3 years, right? So rather than having to pay 22% tax on a distribution or 29% tax on a distribution all this year, they're going to let you spread that out so that you're paying, something more like 7, 7, and 8, or maybe 8, 8, 8, depending on what your tax bracket is. So that will help you in the immediate term with your cash flow if you need to have access to cash, then all your money is tied up in qualified accounts. Another little provision for seniors that are required to take minimum distributions. Last year they changed the rules so you don't have to take minimum distributions from your retirement accounts until age 72. Well, in the CARES Act, they're saying, hey, you know what? You don't have to take them at all in 2020 because they don't want to force people to sell assets at these discounted prices and then have to take the money out and pay taxes on it right now. So all required minimum distributions that otherwise would have had been made in 2020 are no longer have to have happened in 2020. All right. And then one other provision around retirement plans is interesting. So if you were in an employer plan that allows loans, which most of them have a loan provision on their 401k, they've expanded the loan provisions. Normally, they will allow you to borrow up to half of your vested balance or $50,000. They've increased the provisions that you can now borrow up to $100,000. And of course, every employer has the option to adopt that or not. Most of them that I've seen are adopting it, but you might want to check with your plan sponsor if that's something that you're thinking about doing, is taking a loan from your retirement account. Healthcare system enhancements. They really want to beef up the dollars going to healthcare because we got to fight this thing, and you're going to need workers, you're going to need costs to cover testing. So a couple things that might be relevant to our clients is that all commercial healthcare plans now have to pay 100% of the testing for COVID-19 with no cost or no deductible. So when we finally get testing available for everyone, that will be something that you won't have to pay for. That's going to be mandated your health insurance company pay for 100% of it. Also, they've expanded health insurance coverage to cover telehealth benefits. In fact, I think they're going to do like 100% coverage in most plans. So it may be that we're quarantining, we're locked down in our houses, we're not supposed to go out, we're not supposed to be within 6 feet of people. So the concept of doing things by webinar or telehealth or whatnot to sort of diagnose is something that was really important. So Congress has mandated that those benefits are now also provided to all insureds under the healthcare plans out there. And then they've also added, lastly, some additional dollars for Medicare, Medicaid, and supplement providers to give testing and patient care for Medicare folks as well. So to do that, it would just cost a lot of money, but it's in the bill, and they're going to provide for that. And then the last piece, major piece, was economic stabilization. They put $500 billion into the large industry groups that have been seriously adversely affected. Airlines, financial institutions, financials in certain situations, retailers. If your industry group has been affected in just a horrendous way or a more than normal way from what's going on with COVID-19, there's money there to help keep those businesses operating and running, and even loan pools to keep them to deal with cash flow for needs they might have in the next few years as well. So CARES Act was a pretty big piece of legislation for most of our clients. We all know how the unemployment piece works. If you get unemployed, you may get opportunity there to get some money from that. But we have a lot of clients that in one capacity or another owns their own business. And whether you have 50 people working for you or 300 people working for you, or maybe you just work for yourself, but it's your own business. If you're a sole proprietorship, if you're an LLC, if you're an S Corp, any of these kinds of business owners, there is a lot of money available to you immediately. Well, immediately as soon as they process it, so I'm guessing 2 to 3 weeks. That is in this program, and it is intended for you to use to make sure that you don't have to reduce your employee count, you don't have to lay people off, and you don't have to stress about how you're going to make payroll. Now, one of the things I have seen in this that is a little bit of a challenge is the moral dilemma, right? Some businesses are owners, and they're saying, we don't really need it. I mean, we're okay. We can still pay our folks. We maybe revenues are down, but we'll be all right. We don't need the help. We don't need the money. We don't need the handouts. And I think that it's fair for someone to say, I'm just going to let somebody else have that, right? And I don't take it. But I do think it's very important we all realize that it seems pretty logical that on the other side of this, when we all have to pay back the $2.8 trillion in taxes in the future, I had a buddy of mine do some rough calculations. It's like $12,500 per person in the U.S. that will be our tax liability associated with just this one bill. So when it comes time to pay for this, we're all going to have to pay $12,000, $13,000 plus time value money and inflation. Like, they're not going to say, well, you didn't take it, so you don't have to pay. I mean, I think we're all going to be expected to roll up our sleeves and be patriotic and pay our fair share back. So as you're thinking about, do I need it, do I not need it, you're probably going to pay for it even if you don't need it. And so if you feel like you could use it to stabilize your business so you know that your business will survive these times, you may want to factor that into your consideration. So lastly on that, just remember, we're not CPAs, we're not tax advisors, we're not business mortgage originators, we're not loan people. We're just trying to share with you the things inside this very complex set of legislation, things that can help you and that you may need to look further into. So feel free to call us and we can help guide you to the right person to ask, or check in with your tax advisor, or check in with your business banker, your business banking relationship manager. Those would be the people that would be most useful in this understanding what's available to you through these programs. So with that, that's our recap for the CARES Act. We just wanted to share with you that we were working double time. All of our guys have got all our phones forwarded. They can catch us at night, on the weekends. I'm answering emails at midnight a couple days this week. I know that our clients are worried. We're all worried. This is a really difficult time. This is a historic moment, and a pandemic is something that none of us in our lifetime have ever seen. We know that the government is rolling up its sleeves and fighting it with everything that you could even dream up and more. But even in all of that, there's going to be casualties. There's going to be fatalities. There's going to be people that are passing away. There's going to be businesses that are going out of business. A lot of difficult decisions. I know for me, I want to be available for my clients around the clock if necessary, because these are the times that define the value that we have for you. So don't hesitate to call us, email us. I expect you'll get a call back very quickly, regardless of when and where. And we're going to continue to keep you informed and keep this information fresh in front of you and help you to make the best decisions possible. So with that, I'm going to wrap up and go through the required disclosures. The views of those of Adams Financial Partners and should not be construed as investment advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. All economic and performance information is historical and not indicative of future results. Please consult your financial advisor for more information. The S&P 500 is an unmanaged index representing the largest 500 companies in the United States. The Barclays Aggregate Index is an unmanaged index representing the overall broad bond market. Investors cannot invest directly in indexes. The performance of any index is not indicative of the performance of any investment and does not take into account the effects of inflation and the fees and expenses associated with investing. Past performance does not guarantee future results. All investing involves risk, including the loss of principal. There is no assurance that any investment strategy will be successful.